the currency crisis that I predicted, along with many others for so long, is actually starting. And the start doesn't appear to mean much in the beginning. It's very subtle. It's, oh, well, we've been there before, oh, the 10 years this, and there's a lot going on, a lot of talk about it. But once you step over the edge, wherever that tipping point is, it's game over. And I'm afraid, and I'll use the word afraid. I'm afraid, one, there's no way out. I've said that for years. And two, that I'm going to experience it. And three, it'll be less than 3 years out. It could be 3 months out the way things are going.
Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friends, David Morgan and Andrew Pollard. David, Andrew, thanks for joining us today.
Welcome.
Yeah, great to be here.
Well, it's always a pleasure having both of you guys on. So first question is for David. What the heck is going on with silver? You see the fundamentals is there and inflation is there. So when do we reach $100 silver?
I wish I knew. I put it into print, Ivan, in I think 2003 in my first book, Get the Skinny on Silver Investing. And, you know, believe it or not, at the time, of course, 100 sounded obscene when the price was around 5. You know, that was a 20 bagger. And I thought I was being somewhat conservative because at that time and today, I still think in paper terms that silver could make triple digits, and 100's the first one of triple digits. It certainly could go higher. So what's going on? Well, right now, the management of the price is intact. We see that options expiration took place and the price got whacked. You could almost, I used to say this fairly often, I haven't said it in probably a few years, that you could set your watch by and the silver price by options expiration. Without going into too much detail, the algorithms use what's called delta hedging. And delta hedging means that they've got a certain criteria to make the market go to in order for their bets to be profitable. So to get to that level, they just keep selling. If the price is higher than they want it to be in an options expiration, the algorithm just sells and sells and sells and sells. Paper silver, by the way, until the price gets to where they need it to be.
It's sort of disgusting that they can do that. Why can't we just do the reverse and say, I need it to be at 33 by next Tuesday?
You could do that. I mean, let's be fair. If someone was on the long side and you could program it the same way. You could just put enough pressure. It's always buying and selling pressure that moves any market. It's just that these things are controlled by, I'll call it AI, an overused term, but they basically are. And these algorithms and if you've got the ability to tap into the exchange stabilization fund, which means you have infinite money, somebody like me that's probably got, a fairly good net worth doesn't stand a chance against an infinite amount of money, right? So, I mean, I could sit there and, force it toward 33 as your example, Jim, and then I'm out of cash. Now, what do? I get overpowered. So,
yeah. Well, Mr. Pollard, do you have that much money? Can you make it 33?
Well, listen, when it goes, it's going to go, right? And it's I'm not going to say it's funny to see, people despondent at $23 or $24, but I mean, I remember all the way back to last year when it was $12, and you would have, if you said if you'd be happy at $23 at this point, I probably would have said, yeah, I'd be overjoyed. Well, guess what? We were, $30 not too long ago either. And even though it seems boring and range bound, and it's easy to, go into rages of fit based off the wild swings, and these are wild swings where the tail's wagging, the tail's wagging the dog, right? It's the paper market. It has nothing to do with the supply and demand fundamentals of the actual commodity itself. But when it goes, it's gonna go, and I think you're gonna, I think the winds at our backs now, and all the things that you want to see, it's that perfect storm brewing, and I think, obviously with the inflation numbers they just put out, I mean, the genie's out of the bottle on that one. And you're just almost at a point where that house of cards and the risk assets like the stock market right now, seems like they're starting to teeter a bit. And
Mhm.
you know what caused the last real run in silver, the big one, was right after the last washout in the stock market in March of 2020. Guess what silver did? It went, straight hockey stick chart up. Well,
Yeah.
if the markets sort of go here, yeah, it might wash the stocks out at first, but I bet that's going to be the straw that breaks the camel's back and actually sends significant amounts of money into the safe haven assets like gold and like silver.
We've had the recent GDP number. I think that just came out the other day.
Mhm.
And it was sort of a disappointment. Let me share this with you guys. So economic growth was only 2%. I remember they were touting 6% as recently as a month or two ago for the third quarter GDP. So it seems like we're really slowing down now. And in the face of all this, we're seeing a lot of other central banks starting to tighten. We haven't yet, of course, in our Fed. But what do you see happening here, Mr. Morgan?
Well, you threw a lot at me, Jim. First of all, I think the big picture is that the financial markets are finally starting to reflect in these headlines that we're looking at the physical economy. So we're seeing, that CNBCs of the world are telling us the truth or closer to the truth than what they have been. Can they work with their interest rates? Well, as trained person with a degree in finance, we know, and many know, it doesn't take a degree in finance to know that the Fed really sets the discount window. They don't really set rates, but that's a bit of a lie these days because they have so much ability to manipulate buying and selling pressure in the markets, all markets, that they really can kind of set the rates. Could the market overcome them? And the answer is yes, could. We are seeing a little bit of that actually from the aspect that so many of our foreign trading partners are exiting the long bond. They're not trusting US dollars, long-term paper or short-term for that matter. So that means that the game is starting to adjust to the reality that you can't print yourself out of this thing. Yeah. And yet, as your question, and here's the answer, Jim, they're going to do everything they can to use words, music, smoke, and mirrors to make it look as if they can. And what will take place is what Andrew already pointed out. There will be this massive run to gold that cannot be stopped at some point. And once that takes place, it's a psychological event. It's not a given day or time. It's not a certain amount of money printed. It's somebody moving too much money too fast or the wrong way. And the market algorithms see that and start to act to it. By the time these computer geniuses can get to their desks and try to do something about it, it's game over. I mean, that's the way I see it. I think the movie Rollover is a pretty good example of what can happen by what Bix Weir refers to as financial mother nature. I'll credit Bix. I think it was he that came up with that. It might have been someone else. I want to give credit, but it's a great financial term because the currency crisis that I predicted, along with many others for so long, is actually starting. And the start doesn't appear to mean much in the beginning. It's very subtle. It's, we've been there before, the 10 years this, and there's a lot going on, a lot of talk about it. But once you step over the edge, wherever that tipping point is, it's game over. And I'm afraid, and I'll use the word afraid. I'm afraid, one, there's no way out. I've said that for years. And two, that I'm going to experience it. And three, it'll be less than 3 years out. It could be 3 months out the way things are going.
Christine Lagarde, she's the president of the European Central Bank. She had an interesting quote here about a day ago. After some soul searching, and some people question whether she even has a soul, the phase of rising inflation will last longer than originally expected. It's like she was trying to say, she decided that it's going to last. And my smart ass remark was, more likely she doesn't have any options, and she realizes that she can't really raise rates. Italy, Greece, and a few other countries would implode if the European Central Bank actually raised rates or even stopped buying their bonds, right? I mean, for some reason, Italy and Greece are paying like below 1% on their sovereign debt. And I mean, I don't get that one. That's another video entirely. But the European central banks trapped just like we are. There's too much debt. If they raise the rates, the interest expense would explode. There's nowhere to go. And I mean, I guess we're getting a bit off topic here. I don't know what the solution here is for that. I don't know how they taper.
Well, to interject, and sorry to interrupt.
Yeah, no, please do.
The solution is to be your own bank. I mean, to have a hedge. That doesn't mean you have to put everything in gold and silver, but if you don't have something there, you're going to wish you had. I mean, as you know, Jim, one of my favorite expressions is once the ship has sunk, everyone knows how it might have been saved. Well, if you're going to save your own financial integrity, you're going to have something with integrity. And the only thing that has that is gold and silver.
Anything to add to that, Andrew?
Well, you got stunted growth. You've got inflation numbers running hotter than expected. You've got people, including the quote you just mentioned. And you got like Jack Dorsey mentioning that inflation is not transitory and it's going to be getting worse and worse. And now you've got supply chain disruptions too. Life is changing in front of our very eyes, and it happens slowly, then it happens all at once. I think that, the fundamental thesis for owning gold and silver has never looked better. The last time you had a setup like this, I mean, what the setup is, it's stagflation. I mean, especially, if it's not transitory and you've got stunted growth and you've got inflation running rampant, well, last time that happened, they raised rates to 20%. I don't know if they can do that this time. But ultimately, in that same era, gold did pretty well. Silver did pretty well. So, I don't want to see it happen. I mean, but I just think the emperor and the emperors are the people that, are the ones crafting the monetary policy. They don't know what the hell they're doing, or they're morally or intellectually corrupt. But something's happening, and it's not good. Luckily, my entire net worth is based in gold and silver, so I'm, unfortunately, I'll probably stand to profit handsomely on this. But I don't want it's not an ideal point in time for humanity. I'll put it that way.
Well, it's not something any of us are cheering for, but I think a lot of us who are anticipating this are just like, all right, well, this is the hand we're dealt, so let's just position ourselves accordingly to survive it. What you were saying about supply chain disruptions, this is a new one that I just saw today. We heard about the electricity shortages in the EU, in the European areas, and China, and now it's gotten to the point where they're rationing diesel, and this is critical. I don't think people, if 18-wheelers or truckers are no longer able to have their diesel, that means they're not moving containers towards the ports. That means they're not moving food around the country. That means lots of things are not happening. One of the examples I saw recently was magnesium. 87% of the magnesium is made in China, and they're shutting down all the magnesium smelters because they use a lot of energy. Well, guess what? If you don't have magnesium, you can't make aluminum. And a lot of different factories have been announcing they're running out of magnesium quickly. And so what else shuts down in November because of lack of magnesium and aluminum? I mean, I don't know, but we just had Willem Middelkoop on the other day, and he sounds legitimately worried, concerned, scared. He even used the word scared, because we've just never experienced this. Even in the 70s, I don't believe it was like this, Mr. Morgan.
Not even close. I mean, we certainly had price inflation, and because
we didn't have supply disruptions, though, right?
But we didn't have the supply issues. Now, there's so much I could say. I'll try to be succinct. It goes back to the collapse of complex societies. The more, look at all the automobiles and trucks that are sitting there waiting for some chip. That's just one little bitty thing, but you can't fulfill the order for the new truck until you have the semiconductor.
One part missing, boom, you got to shut down the whole damn thing.
So what you did with magnesium is absolutely true. And then what does that compound over to aluminum? Well, that means Coca-Cola can't can as many Cokes. I mean, and if you don't have Cokes and you're addicted to, I mean, it just goes on and on and on.
Well, think planes, Boeing. How much aluminum's in the fuselage of the typical jet? The parts on a car, the bumper is lightweight aluminum, or most of Tesla's made out of aluminum. I mean, it's almost a pure aluminum car. It's for just to be lightweight for the. It's just it's staggering, and I just think it's like you said, complex societies and just-in-time inventory, right? That's
exactly. Yeah, well, Peter Drucker. I mean, it works until it doesn't. That's one thing I guess I want to point out is the philosophy behind this idea of how smart people are. You know, the idea that you can predict markets has been around for a very long time. And you know what? You can predict markets until you can't. Long-term capital management is the best example of that. I mean, these people have held Nobel Prizes for their work in economics, and they had a fund that was magic for about 4 years, and they were able to predict human behavior, maybe 99% of the time. But that's not 100% of the time. And that's where you're going to get the gotcha moment. And that's what happened with long-term capital management. There's no way that Russian bond was going to do what it actually did because they predicted it this way. And that's not what human beings actually did. And that's the point we're at now. We're moving down that line, and Andrew backed me up. It's kind of barely detectable to most people, but it's there if you see it, and then it's going to accelerate. And once it collapses or falls or mitigates or whatever word you choose, once it's obvious to everybody. And here's my real point for everybody, because I think this is the most help that I could come up with, at least today, Jim, is plan on smaller communities, plan on the global empire disintegrating, plan on what you can see locally within a 50-mile radius type of thing. I know that might sound extreme, but in the destruction of a complex system, that's what you're going to do. You're going to go what's local, not what's out there. That 1,500-mile Caesar salad we used to joke about on the Financial Sense News Hour was true. You cannot make money shipping Caesar salad for 1,500 miles. So put that into aluminum, put that into cobalt, put that into batteries, the battery metals that are required to store energy that are produced by wind and solar. I mean, there's so much I could talk about, and I don't want to go on, but think local, think that global is over. And as much as they come on TV and tell us what they want from the World Economic Forum, you'll own nothing and be happy and all this horse crap. Take it as for what it's worth, horse crap, because we need to get back to basics, and we are going to be forced to get back to basics.
You know, what you were talking about, Mr. Morgan, about bringing everything more local, I think a lot of that is onshoring. We need to reduce the length of our supply chains, and part of that's bringing a lot back from China. And I see things like First Majestics. You know, they used to always mine only in Mexico, and now they're going into the United States a lot more heavily, buying mines in Nevada. I think they just invested in your company, Mr. Pollard.
Right. They just switched their motto from one country, one commodity, which suited them really well for about 19 years, I think it was. And now their new motto is 2 countries, 2 commodities, because they bought a gold mine in Nevada called Jarrett Canyon, and they've been deploying a lot of capital into us. We just announced a financing with them last week, maybe 2 weeks ago, actually. And they wanted, this is the second subsequent financing they've come in for in the past 4 months, I guess. But they're trying to get a sizable enough position in us as they can prior to us releasing our maiden resource estimate in early next year. So
I think based on Keith having, or no, I won't say Keith, I'll say First Majestic having invested twice in your company, it's obviously, you know, they're I mean, nothing's guaranteed, but I think they're sniffing to buy you out.
Yeah, well, it's,
I
you
know
know,
you can't
all in, I
comment on
think,
that.
you know, they'd have about 5% on a partially diluted basis. And what's good about that is it's enough to show the market that we're in play, but it's not enough that there's any strings attached, meaning we're still ripe for the picking when it comes to other potential suitors as well. And, you know, anytime we've you know, we had a lot of inbound emails from other corporates, you know, that same day saying, well, you know, can we get down to site sort of thing? So it's just a good validation. But I think if I'm a Hecla or if I'm a Coeur or, you know, the American silver companies, you know, they had it easy for a long time because, you know, Mexico and you know, South America were the place to be. But now you got Keith coming in there, and I think, you know, unless these other companies start upping their game a bit, he might come in and start mowing their lawns pretty quickly here. So it's nice to be wanted, and it's nice to be doing something, to validate these investments. But I think this is just the beginning.
Well, for full disclosure, I am an investor in Blackrock Silver, and I hope you get a bidding war going. All right, so don't just let Keith take it from you.
There you go.
You get them all bidding for it. But anyways, thank you very much, Mr. Morgan, Mr. Pollard. We appreciate, our audience loves to hear from you from our past videos. I read all the comments, and they love hearing from you too. So thank you very much for joining with us and sharing us with sort of a weekly wrap up of what's happened. We appreciate it.
There you go. Thanks very much. Cheers.